Now, as always, please, this show is a show where we interact with you guys as much as us talking. So if there's any Maxis out there, this is your time to shine. Put any information you can in the chat. If you have any questions, like always, I will be writing them down. And if there's any at the end of the show, we will be asking the fellow hosts. It's just the three of us this week. Unfortunately, we didn't know any Maxis to be able to help us in this show. So it's going to be the three of us and the research that we did on this project. Please, I just said it already, hit out that like, share it out. I think this is going to be an interesting conversation. Do you guys want to add anything to that?
No.
Okay,
I'm ready to jump into it.
let's do it.
Okay. As always, we're not starting with the token. We're not starting with the blockchain. We're starting with the simple question of what problem is this actually trying to solve? So we're going to zoom out for a second and we're going to think about how people today interact with money. Right now, most people are using banks. They're using credit cards. They're using apps like Venmo or Cash App. And they're also utilizing brokerage exchanges, which are centralized intermediaries. And these systems work, okay? Everybody knows these systems work. You could send money, you could buy assets with it, and you can also store your wealth or your value with these intermediaries. But under the surface of those systems, there are some limitations, okay? These systems are controlled by centralized entities, and they are also restricted by geography, where you live in the world, and they're dependent on many, many, many intermediaries between them. Add on top of that they're slow to evolve with technology, and in many cases, they could also be expensive. So naturally, crypto as a whole comes in and they say, well, we could fix some of the problems that traditional finance is experiencing right now. And it does, okay? And with that introduction of crypto, we start to get exposed to things like self-custody, peer-to-peer transactions. We have free accessibility globally. And we also have the ability to issue, store, and settle programmable assets. That's what crypto has enabled for us. So with the introduction of crypto, the average person kind of now has to understand wallets. We have to understand private keys. We have to understand seed phrases, gas fees, bridging between different chains. And I mean, guys, let's be honest here. Most people ain't doing any of that, right? Most people ain't doing most of that. So that's where that gap lies. On one side is traditional finance, which is easy, but it's limited and it's controlled. And then on the other side, we have crypto, and that could be very powerful, but it's complicated, and all these different blockchains create fragmentation. And right now, those two worlds, they don't naturally connect. Okay, you either stay in a centralized platform, which is easy, but again, there's limitations, or you go fully on chain, and there's a lot of power to that, but it's complicated. A lot of responsibility is kind of up to you as the individual. And there are very limited systems out there that are successfully trying to bridge crypto and TradFi together. So that's the problem that Cronos is trying to solve as they're coming into the space. They're trying to make crypto usable for normal people while still connecting them to that blockchain infrastructure. That's essentially their entire foundation. Before I get into what the token actually is, do you guys want to add on the real world problem? Okay.
No, I think you're
So
exactly right.
let's get into what the system actually is. Now, when most people hear about blockchain or ecosystem, EVM interoperability, things like that, most people don't actually know what that means, and that's okay. But Cronos is a blockchain network that is compatible with Ethereum style applications, and they are these applications are being built using the technology from the Cosmos ecosystem. That's essentially what it is. But in plain English, it's essentially designed to do two main things at the same time, right? This entire ecosystem. The first thing it's allowing people to do is it's allowing developers to start to build applications that are very similar to Ethereum. So people can build DeFi platforms. Maybe they want to create NFTs. Maybe they want to deploy smart contracts. And because it is EVM compatible, That just means that the developers can take what already works from Ethereum and they can bring it over to this ecosystem without having to rebuild everything from scratch. The second thing that's going on here is that it is connecting to different ecosystems, and they call this Cosmos. So this is focusing on the blockchains being able to communicate with one another. And that's one of the first things that is kind of being solved here, because you have all of these isolated blockchains that are doing many different things. But Cronos is trying to sit in the middle of those Ethereum style applications and that Cosmos interoperability. Now, standalone, this is not Cronos is not a standalone blockchain on its own, okay? Because it also directly, as Caveman said, it's also directly connected to Crypto.com. It's not just a partnership. They are directly connected to Crypto.com. And that's probably what's gonna change the way that you guys end up viewing this ecosystem, because a lot of blockchains are trying to grow by attracting developers to come in. They're building communities online, but Cronos is doing something a little bit different. So Cronos has a built-in distribution with Crypto.com, because Crypto.com already has millions of users, right? It has the mobile app, it has active trading activity, and there's already existing liquidity that's sitting inside of Crypto.com. So instead of starting from scratch, Cronos is already plugged into an existing system. So that integration between Cronos and Crypto.com, this is enabling the users to move from the exchange, Crypto.com, and they can move it directly into the blockchain ecosystems without having to go out and figure it out on their own. So they're kind of relying on one another here. So with a systemic perspective, this is a blockchain extension on top of an existing platform, which is your Crypto.com. Would you guys please like to add to that?
I mean, like, just for me, it feels a little bit like Apple in what they're constructing. Its own ecosystem, its own technology, its own like full service application, not to go anywhere else, but use only their product. I feel like that's what they're trying to achieve.
With Crypto.com.
Correct.
Yeah, it's that integration is really kind of relying on one another to some degree. And I'll get into that a little bit later with my pros and my cons, or essentially the token dynamics or the model to it. But on the surface level, yes.
Misty, anything you want to say?
I mean, I guess I would you guys pretty much touched on it, but I feel like they're building, Bully said the fragmentation of it. So there's one app that does trading, another for DeFi, another for earning, another for payments. Nobody's really unified it all together yet. And I feel like that's what they're kind of working on. Yeah, they're building one platform that kind of does everything, right?
Yeah. Bully, do you have anything else to add?
No. I think I pretty much touched on what this ecosystem is.
Okay.
I'm good.
Misty, you want to take it away?
Team. All right, so where do I want to start here? So Caveman jinxed me, and I have a little bit of a cold, guys. I apologize. I just said, like last week, that I don't ever get sick, and I've got a little one, okay? So bear with me.
'Tis the season.
All right, so we're going to do the team. So in 2016, 4 guys in Hong Kong started a company called Monaco. Did I say that right? Their idea was simple: a crypto debit card that lets you spend Bitcoin and Ethereum like regular money, not a blockchain, not a DeFi protocol, just a card. And then they did something in the space that hasn't been done yet. They spent somewhere between $8 and $10 million to buy a domain called crypto.com. I'm kind of touching on the timeline a little bit, but it's just kind of introducing where they came from and where they went. So the domain, I'll let you touch on that one. So that was Matt It was owned by Matt Blaze, and he had refused to sell it for years, and then they ended up buying it. So let's go down to here. Then you have Chris. I'm not even going to try to say his last name.
Marzalek.
He's the CEO. Before Crypto.com, Chris built a computer electronics design studio in Hong Kong called Starline. He grew it from 3 employees to 400, and from $0 to 81 million in revenue in just 3 years. He sold an e-commerce company. And then we go down, I feel like I'm missing some people. Oh, the co-founders. Bobby Bao, the co-founder. He's the head of corporate development, investment banking background. He runs Crypto.com Capital, their venture arm marketing seed and Series A investment cross ecosystem. Rafael Mil, co-founder and CFO, Brazilian finance professional, 15 years in finance. Then you have Gary O. He's a co-founder and tech lead, a self-described hacker. Okay, and then in December 2025, they brought in Ryan Watts. I think he's going to come up a bit tonight, but the CEO of Cronos Labs, and he's the team running the blockchain. Ryan made a very notable statement publicly. He said token burns alone are insufficient, and that the team is actively debating what meaningful value for long-term holders should look like. That's a key point. I think we're going to probably touch on that a little bit, but we'll get there. Okay, so I think that, did I get everybody or did I miss anybody?
Everyone that I saw.
All right. Do you want to go down into tokenomics?
Yes, please.
All right, let's see here. This one, I don't know where I really want to start.
Start at the beginning. It's always a good place.
Right. All right. So we'll start with Crow. Crow is a single token system. Let's not do that one. Crow does. Okay, so Crow does everything. It's the gas token for the Cronos blockchain. It's the stake-in token for the Crypto.com, the Visa program. It's the governance token, and it's the discount mechanism for exchange fees. The most important use case, and one that creates real buy and lock demand, is the Visa card program. To unlock different card tiers, you have to stake Crow and keep it locked. The more Crow you lock, the better your card, the better the cashback, air lounges, Spotify and Netflix rebates, and higher earn rates. So this means every person who upgrades their Crypto.com card has to buy Crow and lock it up. With 150 million users, every small percentage doing it creates consistent structural demand. Let's see. Then we'll talk about the great burn and the unburn. So in February 2021, at the peak of the bull market, Crypto.com announced that they were burning 70 billion Crow. That's 70% of the entire original supply of 100 billion tokens that were gone forever. The community went insane, Crow pumped, the narrative was scarce supply, growing demand, price goes up, it worked, Crow hits an all-time high of 96 cents that November. So fast forward to March 2025, Cronos Labs proposed a reverse burn, reissuing 70 billion tokens into a strategic reserve. The initial community vote showed 87% opposition. And then at the last minute, the large validators, 2 separate sources identified as being controlled or influenced by Crypto.com, voted yes and flipped the result. So the final tally was 61.18% yes. So yeah, the community was pretty pissed off about that, and really they had every right to be. Because the birds are supposed to be permanent. Okay, so there was that whole thing. Yeah. So then the supply. So right now there's 42.34 billion crow in circulation, 98.54 billion total supply, fully diluted valid valuation at 6.9 billion. But the market cap is only 2.88 billion. That means that there are more than twice as many tokens waiting to come into circulation as currently traded. Plus about 500 million new crow are minted every year for validator rewards, plus 70 billion reissued tokens vested over 10 years, roughly 7 billion unlocked every year. So tokenomics, let's see. I think I touched on, well, I don't know. Should I touch on Trump Media Group buying approximately 1 billion worth of crow in August 2025?
You just did.
That's 19% of circulating supply. So there's that one. So yeah, I guess if you want to go deeper into that, we can, but yeah.
All right. All right. Anything else?
Yeah, no, I guess we can
Bully?
stop there.
What
do you have to say
exactly
over
did
there?
you say is do they have a scheduled release for the circulating supply? What was that? Can you pull that one back
Yeah,
up?
500 million crow a year for minting. Yeah, the tokenomics are, I think this one is my least favorite of all that we've done so far, for sure. I mean, I did go in and kind of look at I came up with 3 things that could happen to help what's happening, but yeah, this is the part of
It's funny
whole
because
picture that
for people in YouTube watching this, I'm looking down at chat on TikTok as we're doing this live, and I can see 2 people down there who we love and know very well, and they share your opinion. Literally, going from 31 million to 100 billion, forced, no option, is always a hard pill to swallow.
for a decentralized, token that doesn't have, it's definitely centralized for sure.
Yeah, is it decentralized?
So
Yeah, no,
what
it's definitely not.
Is there really truth behind the whole governance thing if it was a mass unwanted proposal?
Well,
It was, from what I understand, the vote was no, and then it was reversed by 2 major validators, crypto.com had influence on, and yeah, that's what flipped the vote at the very last minute.
and I'm probably going to touch on the reasons why they forced it through. I am 100% just reading the information. I don't have a thought either way. I was not here during that time. So, do you want to go into the timeline?
Yeah, let's do it.
Okay, so we're gonna go back. We're gonna rewind the clock. We're currently in 2026. We're gonna go back 10 years to 2016. What happened in 2016? Great question. Well, some of this is going to be repetition because we have to, because it's a timeline.
Kind of overlap a little.
Yeah. So again, I say, you say Monaco, you say Monaco, I say Monaco. Who's right? Who cares? It was founded.
You're probably
The
right.
team has a background in e-commerce, finance, hardware, consumer products. The vision was simple. They wanted to spend crypto like fiat anywhere that Visa was accepted. This meant building a crypto wallet, fiat on and off ramps, and a payment card infrastructure. In 2016, this wasn't common. Most projects were exchanges, protocols, or ICO concepts. Early product concept was a pre-launch phase, designed the first version of crypto-linked Visa debit card. I will say one thing, guys. I am sick still, so if I have to clear my throat, I apologize. I'll put myself on mute and then do it quickly. The key idea was to convert crypto to fiat at point of sale. Important. No cards were widely shipped in 2016, though, guys. This was really just conceptual. It was partnerships and infrastructure planning and compliance groundwork. Compliance groundwork is something that you guys are going to see a lot of in the first couple of years for crypto.com. Product build phase, it was early development of a mobile app, of a wallet infrastructure, and backend systems for conversion of crypto over to fiat. Nothing was public facing or at scale yet. It was just engineering and compliance groundwork. 2016, it wasn't a token story. It wasn't a revenue story, and it wasn't an adoption story. It was a thesis and an infrastructure year. The bottom line, if you strip everything down, 2016 equals idea plus the team plus early building. In 2017, however, the ICO launched. And yes, it was the MCO token or the Monaco token. It raised $26 to $28 million USD. The structure, as CryptoWeaver said, 31.6 million MCO. It was a public sale, majority distributed to investors. The fixed supply, no inflation. This money is what funded the card program and the app development and the partnerships early on. It promised a crypto debit card. The core pitch was spend your crypto anywhere Visa is accepted. What was presented was a premium metal Visa card, tiered benefits based on MCO staking. There was cashbacks and perks that they wanted to give as well. In reality, it was still just promising. There was no real rollout, and it lagged for a while. They promised a lot at the beginning. Still promise a lot now, to be honest. Visa and payment infrastructure progresses. Monaco secured early stage card program partnerships. They began working with issuers, payment processors, compliance frameworks, not in the United States. Card programs are heavily regulated. They slowed execution significantly. The app development, first versions of mobile wallet were created, crypto purchasing interface. The functionality was limited. They wanted to store crypto, they had basic transactions, and they had card integration, which was planned and not executed yet. At the peak bull run in 2017, things were hopping. And for crypto.com, there was definitely a narrative. There was easy capital. You could raise as much as you want because everyone was excited for crypto. Retail frenzy was coming in. Thousands of ICOs were launching all over the crypto space. Monaco successfully capitalized on this environment. However, the constraints and frictions, guys, there were delays. And they began with card shipping timelines that slipped. Regulatory hurdles slowly rolled out. Risk factors, reliance on banking partners was a big one. Visa approvals is also another one. And execution complexity, well, quite frankly, they just underestimated the complexity of it. In 2018, this is the year the company stopped being an ICO, an idea, and tried to become a real business. An emphasis on the word tried. There was a rebrand. It went from Monaco to crypto.com. They acquired, as CryptoWeaver said, the domain for 12 million, and they rebranded globally. Why does this matter? Well, it was a shift from a niche crypto startup to a global fintech positioning. The setup was for retail expansion and brand dominance strategy. If you guys weren't here at the beginning, or if you don't know me by now, I'm a big proponent of marketing. I always have been, always will be. And these guys, I mean, no one did it better in the crypto space than in 2021 for crypto.com. But we're in 2018, so I won't go too far. This is arguably the most important strategic move in company history, which was the rebranding. The first real card rollouts began They began shipping Visa debit cards with a limited rollout, primarily to Singapore and Asia Pacific. Users could finally load crypto. They could spend via Visa rails, and they could earn cash back in MCO. Unfortunately, like all first generation rollouts, there are bugs. And the bugs for these guys were delays. They were limited availability. They were scaling issues. Still, it was real world utility alive in the marketplace. And the question was, why were things so sticky? Payment infrastructure plus regulatory friction, guys, that comes hand in hand. To support cards, they needed issuing banks, they needed payment processors, they needed compliance approvals. The 2018 reality was constant partner changes, constant restructuring, heavy regulatory overhead, and card delays, which frustrated the users. There was geographic limitations. So you're hearing all these promises and you're like, this ain't happening where I'm living. Well, no, it was only happening in one country. And there was unclear timelines. So they weren't really telling everybody how it's going to go down. Right. The community sentiment was mixed or bad at best. The belief in the product was starting to go down, doubts on execution and speed. And this is why rollout was slow. Not because of lack of demand, but financial system friction was the reason. The launch of crypto and maybe bad management. The launch of Crypto.com app happened. The app launched publicly. It was the early stage. The capabilities on the app at the time were buy and sell crypto, wallet storage, and card management where available. This becomes the core retail funnel that Crow later tries to monetize on. In 2018, this is when the early planning of Crow actually started. They began designing a scalable utility token, but it wasn't part of the user experience yet. Strategic reality of 2018, it was a real world infrastructure year. There was payments with Visa integration, there was consumer onboarding with the app, and there was brand positioning. All positive in my opinion. 2019, this is the inflection point year. Crow token launched, introduced as a second token alongside MCO. We just talked about it. You know what happened. I don't know if you said this, but MCO, Crow token is an ERC20 token. So that's something that may want to be known. Now, why these differences were structurally important is because MCO was about card staking, cashback, and it had a limited supply. Crow was about payments. It was about rewards. It was about incentives, and it was about future ecosystem growth. So it was more about trying to grow the ecosystem as opposed to what MCO was doing. The reality, Crow becomes the growth and emission token, and MCO becomes increasingly sidelined. Crypto.com app expansion, app significantly was upgraded. The new features were buy crypto with fiat, instant credit debit purchases, and portfolio tracking. This becomes the main user acquisition engine. There was the launch of Crypto Earn. It earns interest on crypto deposits. The mechanics were lock crypto, earn yield, and that can be paid in Crow or crypto. This is huge because it introduces the yield narrative. It drives Crow demand and distribution. Visa card expanded. It was the US launch. Crypto.com cards launched in the United States, which is a major milestone. The features were cashback, MCO based at the time, and a tiered staking system. Products moved from niche to mainstream. Crow utility begins forming. Crow starts being used for rewards distribution, cashback incentives, earn program payouts, and internal ecosystem incentives. But still, no Cronos chain yet, no DeFi ecosystems, and no gas utility. The payments vision expands from Crypto.com pushes narratives. Crow equals global payment token. The focus areas were merchant adoption, crypto payments and infrastructure, and cross-border payments vision. Again, just a vision, not happening yet. Still mostly early stage and conceptual. The early concerns begin with these key issues. So what people were really starting to talk about back then were why introduce Crow when MCO exists, which is a perfectly, absolutely important question. The supply difference, 31 million to 100 billion, was not tolerable. And the value accrual was very unclear. And this becomes an absolute major controversy in 2020. The strategic reality, a tokenomics transition year is what 2019 was. They introduced a scalable token in Crow, they begin emissions-based growth, and they build yield and reward system. The bottom line for investors, Crow was introduced as a high supply, high utility incentive token, where MCO remained a legacy scarcity-based token. Translation, the system shifts from scarcity to growth via emissions. Users don't fully realize it yet, but structurally, Crow is positioned to take over everything, much to the chagrin of most. In 2020, this is the most important and most controversial year in Crypto.com's history. The forced MCO to Crow token swap. Users were required to convert MCO to Crow. The swap ratio, 27.6 Crow per MCO, which incentives for, these were the incentives for the early swap. So that was when at the very, very beginning, it was 27.6 per MCO. Why does this matter? Well, before MCO was low supply, scarcity-based value. After, high supply, emissions-based system. Or in other words, they went from scarcity model to inflation plus incentive model. Many users felt forced into the swap. Crow supply massively larger and it perceived devaluation. This event still defines how serious investors view Crypto.com today. And if you don't believe me, just look at the chat. Visa cards transitions to Crow. Card system fully migrated to Crow staking. Crow is now controlled. It had cashback rewards, card access, ecosystem participation. Crow becomes the incentive engine. Crypto.com aggressively deployed Crow across products such as Earn for yield farming style returns, cashback rewards, referral bonuses, staking incentives, which led to rapid user growth and heavy token emissions. That's why I shouldn't be reading on the side. I shouldn't be looking on the side of my eye. Crypto.com exchange launch. Company launched the Crypto.com exchange, a fully trading platform. The features were spot trading, discounts using Crow, and liquidity incentives. Crow utility expands into trading fee reductions and exchange ecosystem usage. App ecosystem matures, Crypto.com app becomes fully functional retail platform. The capabilities now where they could buy, sell crypto, earn yield, stake Crow, and manage Visa card. This is now a complete consumer crypto ecosystem. Global expansion accelerates. The card rollout expands into Europe and more regions beyond Asia and US. Crypto.com moved towards global retail adoption. Market contacts for 2020, it was the DeFi summer. So yield farming explodes, user chase returns, and Crypto.com aligned perfectly. Crow was used for yield plus incentives. In 2020, Crow had become the single token controlling the entire ecosystem. The truth that people missed, or most people missed, it was a complete economic reset. Early MCO holders diluted into a large supply system. Crow designed for scale and not scarcity. By 2021, Crypto.com, it went mainstream. They took over the Staples Center and they renamed it Crypto.com Arena, which was an absolute historic move. One that I have a complete love for. It was a $700 million deal to rebrand the Staples Center for the next 20 years. For those who don't know, Crypto.com Arena is in California, and it's the home of the Los Angeles Lakers and Clippers. Massive global brand visibility positioned Crypto.com alongside Nike, Coca-Cola level sponsorships. They also had the Fortune Favors the Brave campaign featuring Matt Damon. The strategy targeted, I can't say Matt Damon without saying that, sorry. The strategy was to target mainstream retail users with emotional, aspirational messaging. The result? Huge user growth to the tune of 50 million users growth in 2021. It was a three-way massive marketing blitz. Fortune favors the 500. Fortune favors the 500. Fortune favors the Brave ads, Crypto.com arena naming rights, and the UFC F1 global sponsorship, making sure that when the word crypto was spoken, Crypto.com was front and center in that. November was the real news, however. Cronos blockchain launched critical for Crow utility. So basically, they launched Cronos blockchain. Built using Cosmos SDK, it was EVM compatible. Before, Crow equals rewards plus exchange token. After, with the blockchain, Crow was the gas token and DeFi ecosystem asset. It went from 0 to 1.77 billion TVL, according to DeFi Llama. This is the moment Crow becomes a real network token. DeFi ecosystems began, early projects launched on Cronos, DEXs, lending protocols, yield farms. Crow is now used for gas fees, liquidity, and staking. Meanwhile, Visa card programs, they start to scale globally. Cards expanded across the US, Europe, Canada, and Asia. Features included cashback in Crow, subscription perks like Spotify and Netflix. There was a tiered staking model, and it became one of the most recognized crypto products globally. Crypto.com's ecosystem now includes retail trading, earn with yield, card management, and the exchange had spot plus derivatives and Crow fee discounts. Crow was embedded across all user flows. Crow price explosion, it experienced a massive appreciation. In 2021, at its peak, it was at 99 cents. Driven by marketing, user growth, Cronos launch, and the DeFi narrative. Major partnerships and sponsorships, Crypto.com signs the deal with the Los Angeles Lakers, the UFC, Formula One, FIFA. And then the question for a lot of people is, why so focused in sports? Well, in 2021, the percentage of crypto investors that were male was 74%. And sports is a male-dominated audience. According to Associated Press, it's 66%, with some estimates as high as 70% males. Essentially, they're just targeting their market audience. While 2021 looked perfect, guys, under the surface, there was a heavy reliance on incentives with Crow rewards, and the yield sustainability started to come into question. The high marketing spend on global brands, it was taking its toll too. It was essentially maximum expansion at maximum cost. The marketing spend was massive, the rewards was aggressive, the growth was exponential. It was not sustainable. And 2022, if 2021 was expansion, well then 2022 was contraction and credibility testing. So what happens when the macro collapses? Well, everything starts to fall, right? And that's basically 2022. Crypto market enters deep bear phase. They're triggered by rate hikes with macro tightening, the leverage unwinding, the liquidity drying up, major failures with Terra, Luna, Celsius network bankruptcy, 3 Hours Capital liquidated, and the FTX implosion. What happens when that happens? Well, you do what any responsible company would do. You look for ways to cut costs. The solution? Crypto.com/rewards. What they cut Visa card cashbacks reduced, staking rewards lowered, earn yields slashed, because rewards were unsustainably subsidized. The public reaction? Massive backlash on social media. Users felt benefits bait and switched. For the first time, the brand was in damage control. Unfortunately, it didn't stop there. The card program was repriced. Before in 2021, high cashback up to 8%. free subscriptions for Netflix and Spotify. Everyone can have it for free. After, in 2022, low cashback. Caps were introduced, and some perks, notably the two I just mentioned, were removed. Layoffs and cost-cutting. Crypto.com conducted multiple rounds of layoffs. The strategy shifted from grow at all costs to just stay alive. Proof of reserves after FTX collapse was also a narrative that they really started to push. Crypto.com published proof of reserves. The goal was to say, guys, relax. We're going to show you right here that the customer funds are backed. They wanted to rebuild all the trust. The issue is that proof of reserves doesn't equal a full audit. Skepticism maintained across the industry. Crypto.com experienced a surge of withdrawals post FTX. What happened? Well, temporary fear around solvency. Platform remained operational, but it took a huge hit. They did not collapse, however. The app was still functional, exchange still active, and cards still issued. Cronos Labs was also formed to scale adoption to counter this negative energy. They launched a $100 million ecosystem fund and startup for accelerator programs. In fact, Cronos chain continued. In 2022 reality, the activity dropped with the market. The TVL declined from an all-time high of 3.17 billion, this would hurt, to 404 million. So 3.17 billion to 404 million. DeFi, to say it cooled off, that would be an understatement. Crow token impact, price dropped significantly, demand decreased, less rewards, less hype. Crow was heavily tied into incentives and user activity. The bottom line, 2022 forced Crypto.com to cut unsustainable rewards, to reduce costs, and to rebuild trust. It exposed what happens when those artificially boosted incentives disappear. 2023 was about stabilizing the business and rebuilding credibility quietly. I saw someone in chat say that, quietly. And that's what 2023 was about. 20% of the workforce was cut in 2023, basically because of the fallout of 2022. The company needed to reduce burn and become profitable. Those are things, like, I can speak quickly. As a business owner that just went through C19, I absolutely was in the same boat, and good for them to understand what they had to do to continue operations. So this is something for me personally that I actually can respect. Does it suck for the 20%? Absolutely. But then otherwise they all go down. Institutional retreat was a big signal. The key move was Crypto.com shut down its institutional exchange in the US in June of 2023. Why? Well, there's low demand from institutions. It's important because the 2021 narrative was institutions are coming. Reality, they didn't show up at scale. Cronos stabilized after the 2022 crash, and the hype cycle was gone. Crow became less narrative driven, more tied to actual usage and retention. Cronos blockchain was in the same position. No explosive growth. It continued development at a slower pace. Lower TVL meant more sustainability. And the user growth continues, like I said, but slower. It reached actually 80 million users in 2023, which is impressive because 2023 saw some pretty crazy things. Governments tightening crypto rules, exchanges under more scrutiny, a push toward compliance, licensing. Cryptos.com strategy heads straight into it, and they leaned into the regulated expansion. 2023 was a reset and a rebuild year. Cut excess, stabilize operations, regain trust, maintain core products. 2024 was controlled expansion and regulatory alignment. The spot Bitcoin ETF in the US was launched. And what did that do for Crypto.com? Well, it gave more pressure to compete with regulated financial players. Crypto.com continued expanding into Europe with MiCA alignment, Asia Pacific, and selected regulated markets, but targeted not aggressive like 2021. Crypto.com also filed a lawsuit with the SEC in October of 2024. They received a Wells notice, a pre-enforcement warning, and argued the SEC was overstepping jurisdiction, treating most crypto assets as securities improperly. Crypto.com went from compliant player to actively fighting regulators. Other key moves in 2024 were registered in Ireland as a legal crypto provider, and they were recognized in Hong Kong. Corporate banking services in Asia Pacific. They worked with MasterCard to expand digital payments in new regions, and crypto payments enabled in stadium environments in Australia. Users could actually pay for food and drinks using crypto directly, which meant it went from trading to actual usage. UEFA Champions League sponsorship occurred as well. Crypto.com became the official sponsorship of UEFA Champions League. You guys know I'm not a soccer fan. That would normally roll off my tongue. This is key because it continues the whole sports strategy. Targets global audience and billions of users. New campaign featuring Eminem ran during the NBA playoffs as well. And the Cronos ZK EVM Layer 2 was launched. It was built on ZK rollup tech, which gave lower fees, Ethereum interoperability, and gasless style user experience improvements. This is massive technically because Crow's ecosystem moved toward an Ethereum scale infrastructure, like Bully was talking about earlier. Global crypto adoption grew. There was a macro tailwind. Global crypto users grew from 583 million to 659 million in 2024, which is 13% growth, meaning bigger addressable market and more potential users for Crypto.com. Crypto.com reached 100 million users by mid-2024, or a 10x growth since 2021. Crazy that they did that considering how much they were up against. There was a strategic pivot toward financial super app. Crypto.com gave the roadmap. And they basically said that they were going to go into stocks, banking, advanced derivatives, and AI tools. They're no longer just a crypto exchange. They're trying to become a full financial platform. In 2025, this was the year that Crypto.com moved from retail crypto platform toward regulated financial infrastructure and institutional rails, while also pushing Crow and Cronos much harder into payments, treasury, and investment product narratives. The regulatory and legal milestones. The SEC investigation closed with no enforcement action, and this removed a major overhang for 2024. In Europe, they secured the MiCA approval, and which meant that they could operate across EU under a unified framework. In Canada, they achieved restricted dealer registration. In the UAE, they received a principal approval for stored value license, which basically means that they licensed for derivatives trading. In the US, they applied for the National Trust Bank Charter, and institutional expansion in Europe grew to secure the MiFID license, which enables securities, derivatives, and CFDs. The strategic shift fully into financial infrastructure was on. Custody, derivatives, payments, treasury infrastructure were all paramount for them moving forward. Institutional and TradFi integration, they were accepted into the BlackRock Build tokenized fund as trading collateral, integrated with Plaid, fiat on and off ramps. Banking and payments, they partnership with Green Dot, the credit card program with Bread Financial. They basically had custody and expanded institutional custody offerings of 120 million insurance coverage added. The political and institutional capitals, there was a major narrative shift there. They had a partnership with Trump Media, which you kind of talked about earlier. Infrastructure plus custody plus ETFs. The treasury strategy was Trump Media purchased 684 million Crow, or 2% of the circulation. This is one of the first corporate treasury allocations into Crow. The deal included lockup restrictions on tokens. Pretty important. Anyone who wants to go into Crow, it's locked up, so you don't have to worry about them, just dumping it on you. Meaning they could not immediately sell. This reduces probability of early liquidation. Crow token developments. Crow pushed into the ETF narrative with Canary Capital filing, institutional trust structure with the Crow Trust, and continued use for rewards, staking, fee discounts, and strategic repositioning. From retail reward token, which is what it started as, toward a financial product with a treasury asset. In July of 2025, there was a major tech development. The block time improved to sub-second speeds and gas fees reduced significantly. Faster transactions, better user experience, and more competitive with high-speed chains. Cronos ecosystem key features that happened in 2025 was direct crypto or prepaid card transfers, which connects on-chain activity to real-world payments. They continued development into the ZK EVM scaling direction, AI plus agent infrastructure roadmaps at the early stages, but still not leading in any DeFi ecosystem. Payments and real-world use and expansion. They enabled crypto Visa payments via Sony in Singapore, South Korea at KSNAT partnership, and Dubai government fee integration. That was a memorandum of understanding. And the shift was from rewards to actual payment rails. Partnerships and integrations, major integrations. Toswal Super App, which is 4 million users. I don't know if you guys know Toswal, but if you don't, you probably should look it up. It's what WhatsApp would like to be. Multiple custody partners with like Ton and Sui. U.S. exchange expansions efforts resumed. Derivatives, they achieved CFTC licensing stack and meaningful entering in regulated derivative markets. In May, Crypto.com acquired Cyprus-based AN All New Investments to secure a markets and financial instruments derivative license, enabling it to offer securities, derivatives, and contracts for differences across the European Economic Area. In November, MyPrize announced a partnership with Crypto.com to launch MyPrize Markets, integrating Crypto.com's CFTC-regulated prediction market contracts. And in December, they entered into a partnership with DBS, which allowed Crypto.com users to deposit and withdraw Singapore dollars and US dollars via the bank. The exchange will also be allowed to set up client money accounts for its customers. And the bank charter will move, obviously, the US National Trust Bank Charter. If approved, Crypto.com becomes federally regulated custodian, which is massive because it moves it closer to real banking status. Bottom line, 2025 was not a hype year, it was a power positioning year. Crypto.com is trying to become a regulated financial gateway for crypto and traditional assets, and Crow is being repositioned as a system token tied to that infrastructure. 2026 hasn't been about announcements. It's really just asking the question. Custody usage, derivatives activity, treasury style allocations. Is that going to use Crow? That's it. Is Crow going to be used? It's less driven by cashbacks or retail hype.
That's the $1 million question.
It's probably a much more than a million, but yes. So there's a couple things that happened in 2026, but nothing crazy. I just want to make sure I didn't. No. Oh, you're good. And there you go. That's a timeline. So I know there's a lot of hate for Crow because of the tokenomics, because of they kind of went corporate on this.
So if that's what's going to get a lot of hate, you're definitely going to not like my token mechanics for it.
Let's hear it.
Do you want to jump into it, or do you want to talk a little bit more about Crypto.com and where do you project for them to be in 5 years? Are they going to maintain that competitive edge?
Here's what I will say. You could create the best technology. If you can't get it into front of the eyeballs, it won't matter.
So you touched a lot on like the compliance and regulation side through the time frame. But what I'll touch on with that is crypto.com. Crypto.com's charter specifically enables staking as a federally regulated custodian, whereas Circle, Ripple, Paxos, BitGo, they all have charters too. None of them have the exchange, custody, staking, and banking under one federal umbrella. So when institutional money want a regulated counterplays want everything, they're probably going to go to crypto.com. So that's kind of, interesting. I think the future is, so if we're talking investment future, I mean, even that, we could touch on that. I think they have some tokenomics stuff. Well, we'll touch on that when Bully goes on his thing. But so I think the company is going in a great direction, but the investment isn't, you know what I mean? For me, it's a huge disconnect. Like when I did my final grade, it very
Good thing.
disconnected, but yeah.
No, you're absolutely
Yeah.
right in terms of compliance and regulations. Crypto.com is held to a much bigger standard than the actual Cronos ecosystem. So there is that weird disconnect between the two. You're right.
All right, so let's do the total addressable market.
Yeah. Okay. Essentially, the scale of the entire ecosystem. How big is this opportunity that they are trying to pursue? So Kronos is kind of coming in and they're addressing multiple things. I feel like the last couple of lives that we've done, these projects have addressed multiple industries. One of the biggest strengths to crypto.com is that retail crypto user base. So at scale, you have hundreds of millions of people that are coming into crypto, and that adoption, it's growing year by year. So there is a massive onboarding opportunity, and Kronos is positioned pretty much directly right in front of that opportunity because crypto.com already has such a large existing user base. But they're also pursuing DeFi, which is including your lending, your borrowing, your decentralized exchanges, we're talking $100 billion in TVL at some point with DeFi. So the long-term perspective with DeFi is that as that market continues to grow significantly, then with more assets coming on to these blockchains, you'll start to see a larger user base interacting with these applications. So that 100, what was it at the peak? It was 100. I want to say the total. Hello.
Three.
Yeah,
TVL
about
on
100 billion in TVL locked up. So who knows what that's going to be 2030, 2040. It's continuing to grow. I mean, just pay attention to the charts here, ladies and gentlemen. The next thing that I think that they're pursuing is the payments, right? And fintechs. The global payments, you're talking over $100 trillion every single year. And then the fintech services, a couple more $1 trillion in transactional volumes. Crypto.com, in terms of the payments, they're already positioned with the debit cards, and the payment integrations are already kind of integrated into that client base that is interacting with your crypto.com. So you also have the NFTs, right? Your NFTs are representing your digital identity. That market, it's still significantly smaller. It's not trillions of dollars, but it's still in the billions of dollars. And then you have gaming, right? Gaming is still pretty small. It's early, but maybe in the long term, it potentially could be worth some decent money. Who knows what the projections are for that? So when you combine all of that, all of these markets, you're talking about trillions of dollars in potential demand, right? The TAM for this type of ecosystem is very large. So we have to start to, and this is what I was talking about before, we have to start to address the token mechanics, right? So how does it actually capture the value? And I think it's really important to understand when you are investing into something, I think it's important to make sure you understand the problem that they are going after. And that problem could be very large. And the system and the solution for that problem, that could be that it could make perfect sense, right? The team could be stacked and the market could be in the trillions of dollars, but none of that is going to matter if that token doesn't actually capture that value, right? Because that's what we're doing. We're investing into the token itself. So we have to separate two things here. Most people tend to combine these two things together, but we have the system and we have the token. They are not the same thing because the system can succeed while the token does absolutely nothing. So the $1 million question, if this system is used more, is the token required? Chat, you could throw that in the comments real quick. If this system grows, if this system is used more, is the CRO token required? So on the platform side, right, your crypto.com, you can have the Crow. That's primarily the Crow is primarily used for your staking rewards, right? That's your incentives within that ecosystem. And then inside of the actual Cronos ecosystem, that's kind of coming down into your trading fees, card benefits, things like that. So the platform side, the token is tied to the benefits and the incentives. But now on the blockchain side, Cronos is used for the gas fees, the staking rewards, the validators. They're actually utilizing the token to interact with those applications. So the blockchain side is tied to the network activity. Now, you could say that the token is used in multiple places because it is, depending on whether or not it's on the platform or if it's on the blockchain side, it's utilized in multiple places. But is that usage of the token creating reoccurring demand for the CRO token, whether it's the platform or the blockchain? And the answer for it is no, it's not. There is not a direct tie to the real world volume that we're seeing either on the blockchain or on the platform that is going to directly tie over into the CRO token. There's not a strong indication that they are linked together, right? That system can function heavily, and the demand for the token doesn't necessarily equate to each other. And again, we find a disconnection with this because the users, at least for crypto.com, they're not coming into this ecosystem for the CRO token itself, right? They're coming in through crypto.com, which means that platform, the exchange, can significantly grow. And the token necessarily is not going to benefit from that growth, at least on the platform side to it, okay? So there is a distinction with that platform because the demand could be coming in from a multitude of different avenues, and none of that is necessarily reflecting into the CRO token itself, right? It may come from the staking, but not people required to use it with real economic activity to it. So the CRO token, it does have real utility, but it doesn't have a strong value capture model to it, okay? Because the usage of the system does not force demand for the actual token. I don't like it. I don't like the means of how it's capturing the value. I don't like that there is not reoccurring demand for it. That's probably one of my biggest negatives to it, is that there is not forced reoccurring demand tied to real economic activity.
So Strawberry asked my opinion on it, so I'll give it. So I agree with what Bully said completely. The only thing that I will add to that is that Ryan Watts was hired to fix the tokenomics of Crow. So what he's been working on is a revenue sharing model, structuring a way for Cronos chain activity and crypto.com exchange fees to flow back to Crow stakeholders, similar to how BNB works for Binance. And then we have the validator redesign that he's working on. So tightening the validator structure so staking Crow has more meaningful yield to real network activity. Then we have the developer flywheel, the AWS partnership with 100K credits per startup. This is his play to get builders on Cronos, which drives on-chain fees, which eventually flows back to the holders. And then he's working on RWA and tokenized assets. The Cronos app launched in April 2026, as Caveman mentioned, with tokenized stocks and commodities, which create fee generating activity on chain. So those are a few things that he's been working on to kind of close that huge gap of like company tokenomics. That's his main goal, is to like do that. So if he's successful, Crow could do very well. Yeah. You got anything, Caveman?
You guys just shit on my parade. I like it.
I think I actually lost my list of the tokens that we've done. I gotta get that.
Did you really?
I'm gonna have to retype that in.
Honestly, guys, I appreciate what you guys just said and brought to the table. I wasn't so against Crow as you guys clearly are, and maybe it's the corporate guy in me. Maybe it's the person who sees how business operates. And if my window into a crypto project that clearly has that lens is Crow, then I'm going to. By the way, the percentage of what I owe in crypto that's Crow is like. Okay, so we don't have to worry about that. But it was a flyer I took out a while ago. I left it there, and we'll see.
So, and let me clarify. I think they're a great company. Obviously, there is a gap for the investment or the tokenomics side of things, but I was investing in Crow in like 2020. Like crypto.com, like I've been a fan for a long time, but stuff has happened, and we just got to see where that goes. And I mean, I'm not saying it's a bad investment. I'm just saying.
There is a great question. I have a question for both of you. Do either of you guys actually have either of you tried to use crypto.com?
I use it all the time.
Do you really?
Yeah.
Oh, I hate it.
No.
I don't mind it. I mean, so in my research, in all fairness, I feel like crypto.com is not so huge in the United States, but I feel like it's kind of catching up. Coinbase kind of fills that for a lot of people, but I think that it's kind of closing that gap a little bit. I personally love Coinbase. That's my go-to. Just because I've been on it forever, but I don't love Uphold, and I don't love a few other ones, but I do like only because tokens I can't get on Coinbase, I can sometimes get there, and vice versa with Uphold. So I kind of use all of them, but yeah.
Anyways, I not a big fan of the actual platform, but that's just me. Pros and cons, guys.
Bring us into it.
What? Sure.
I'm stuck.
If you ask me, I shall deliver. Okay, so the good, the bad, the ugly. Good, strong distribution, large user funnel. Bad, weak independent adoption. The ugly. Bully, what's ugly about Crow?
The token model, the token value capture model. Weak
The unburn.
value capture for the token.
Dependency on a single company is also another one that's not so.
Yes.
That's all good. And the prior leadership reputation concerns. Those would be the ugly for me.
What about
Um,
competition?
yeah, I mean, like you're talking about like Binance and yeah,
Coinbase,
the coin. They pale in comparison
Ox,
to all of them. They are
Solana,
not a leader in anything.
traditional banks.
Correct.
I'm pretty much you got me on pros and cons. I'm pretty much with you on that.
Really, anything that you want to add to the pros and cons?
So I have the pros, the users, the 150 million users, the 120 plus licenses. It's the most regulated crypto company on the whole planet. So, that's kind of cool. The OCC banking charter incoming. It's kind of a first mover there. The Cronos EVM, fast, cheap, compatible, easy for devs to build on. The Trump media 1 billion purchases plus the ETF filings. The exchange utility creates real structural pro demand, so card staking. The more my pros. And then the cons, the unburn, that's ridiculous. The FDV 2.33 times market cap. So the 2+ years of supply pressure baked in, that's not real great. The Chris accountability gap. So that's something we didn't touch on. So Chris guaranteed the community that it was going to hit $1, and it didn't. It didn't, that was, another on their. The on-chain activity is extremely thin. The derivatives open interest collapsed 91%. I feel like the speculative interest is gone. Yeah. And then exchange revenue doesn't flow to token holders are my cons. That's it.
So, can a company called Crypto.com fail?
Of course.
Yeah?
Of course.
Does it get acquired?
I think any company could fail. Ultimately, I would say that their biggest pain points would probably be. I mean, they're dependent upon user accessibility, and the compliance and regulatory environment is shifting. Right. So this is a platform that depends upon geography. So depending on whether or not they can actually continue to expand here in the United States, I think could greatly impact whether or not users continue to onboard with Crypto.com. In terms of the integrations or acceptance or people absorbing Crypto.com, I don't see who would want to. Why would you want to? Who? There are other competitors? I honestly, not for nothing, I honestly don't even feel like, don't get me wrong, Crypto.com is a massive exchange. And I think that there are plenty of people who will forever be loyal to it, but I don't ever see Coinbase coming after Crypto.com. I don't see at least any U.S. exchanges looking to integrate in with it. But can the company fail? Absolutely. I think any type of centralized exchange is dependent upon their user base. So can they maintain what they have, and can they continue to expand?
That's an interesting statement in the chat. So on the question, who would want to take it over? Eric Trump and World Liberty Finance.
Oh, well, we
Get
know who
outta
wants to
here.
touch on that. Go ahead,
Get out of
Kingman.
here.
Oh no, we did. We don't need to rehash
Stop
it.
it.
Yeah. No, we're not going to go back. Okay, so final rating, guys. Let's hear it.
I give these boys a 5.
Oh,
Yeah. Has real utility, just I'm not touching it. Not interested in it.
So I break it down. You guys know what I do. So regulatory compliance, I gave a 9. Brand and user base scale, I gave an 8.5. Team and leadership, a 7. Technology, a 6.5. Tokenomics, 3.5. Ecosystem and on-chain activity, a 4. And an overall score of 6.4. So this is my lowest scoring one. And again, I'm looking at it more, and I gave it the lowest score, but ironically, I feel it's going to do very well. I think that one thing that we're not taking into consideration is that we don't even understand where this is all going. You know what I mean? And I think they're going to be a big player in the future. And I do think they're going to get their stuff together with the tokenomics, but the trust for me isn't there. Like there's been a lot of promises made, a lot of promises broken, a lot of blah, blah, blah stuff. So it's not a real tight professional company as far as how it deals with that type of stuff. Does that make sense? But they've done great. They've built great. And I think they're going to do great things. Just not my favorite. I gave VeChain a better score than this one.
Chat, this is why it's important for you to do your own research. Because if you weren't listening, if you were just listening and you didn't hear this last part, you would have thought, I would have thought that you guys would have gave this like a 2 or like a 3.5 for everything that you said. Because at the end of the day, we are investing, right? We're investing and we're looking to make money on our money, value on our value, whatever you want to call it. And if the tokenomics, I guess, so it's interesting. I was thinking when you were talking about the breakdown, right? The tech, the adoption, tokenomics, all that stuff, and you're giving a number to that. What the question I had in my mind, not to put you on the spot, Weewoo, was do you give value? Does a category have more value? Like, let's say you give like adoption, if this was a pie chart and you gave adoption like this sliver, but you gave tokenomics like this sliver. Like, so a 9 isn't a 9. You know what I mean? A 9 and 1 isn't a 9 in the other.
So my weighted score is in percent. So yeah, regulatory and compliance is 15%. Brand and use base is 20. Team and leadership is 15. Technology is 15. Tokenomics is 20. And then ecosystem and on-chain is 15. So I do have weighted.
The weighted score, okay. So I guess at the end of the day, really the only thing that really matters as an investor is the tokenomics. Like where can that value get captured, right? Doesn't matter if you're regulated.
Yeah.
So,
and I mean, do I think this is a home run, whack it out of the park? This is the best, no. So I think we know that there are much better options in this space that are positioned way better tokenomics, just better everything than this one. I feel like this one is definitely more of a gamble for sure.
Right. Which leads to my score. I started this live with a 6.5. However, after listening to my co-hosts, I reduced it to a 6.
Nice job, Pulley. Nice. Look at that.
Now, I will say that I am the proud owner of, let's say, like somewhere around 2,000 USD of Crow. But for me, that was, and guys, like in all honesty, that for me, it was just like going to the casino, right? Like I'm literally just, there's my bag. I'm never going to look at it. I can't because I staked it and it's like locked for like 365 plus. Actually, I think for some reason it's over now. And now if you stake, they don't lock it for 365 days plus 5 or 8. I think now it's just, you can unstake it whenever you want, which would have helped me a lot when they had a huge spike. I would have sold and then anyways.
It was nice. So can I just say that too? Like, there's a couple different ways of investing. Like, we have our like bags of like, these are our long-term things. And then we have like, this is pumping. There's a narrative, there's hype, there's, people talking about it.
They're on the flipping roof where the Lakers play. They're on the mat of the UFC. This is important. I like I started talking about this earlier, I can't stress the importance of good marketing for any company. And I
Right.
hate to break it to you guys, but they're in the business of finance. It's still
Yeah.
a business.
I
It
don't
still needs
disagree
to get
with
out there.
And so this is how our cycles work though, right? Like I shouldn't say we, I should only speak for me. I live in two different worlds of crypto. I
Mm.
live in this is what's being built, this is what's coming, and this is what I see. But I also live in, we have 4-year cycles. Well, this one's turning into a 5-year cycle, but we have these cycles and those matter. And those cryptos within those cycles matter because that's what's pumping. That's where you're going to make your money. That's, there's two different plays, in my opinion, that we have through all of this.
You lost me at 4-year cycle.
It's a 5-year cycle. And I don't care what anybody says. We are in the middle of this cycle. We are not in a bear market. We are getting ready to pump. Okay. I'm going to prove it. So
Can I have that written in blood, please?
what is it?
Can I have that written in blood and stamped?
Yes, I'm gonna do a video soon on this because I'm gonna break it all down. I say that, but I haven't done a
I just
video
want to
in like
know
6 weeks.
where's
guys.
the liquidity coming from? Like
I'm
the
gonna tell
4-year
you.
cycle every
You
single
just
time.
wait.
Oh, okay. Stay
It
tuned.
really has
Stay
been a
tuned,
4-year
chat. Stay
cycle
tuned.
up until this cycle. We really didn't get the blow off tops and all of the things, and